Hey, happy Friday, everybody. Today's another daily market report brought to you by Mike Bjork. Today's Friday and June 4th, and today's the day we've been waiting for, the big news, and that news is the jobs report. So let's take a look here. We got the non-farm payrolls that actually came in at 431,000. Their economists were projecting 540,000, but the prior month was 290,000, so it looks pretty good, but here's where they're really disappointed. 411,000 of those actual jobs were temporary census jobs. That's not enough to really help us sustain the growth that we need to get out of this slump we're currently in. Unemployment rate dropped. They're estimating to come down to 9.8, but dropped down to 9.7. And again, that's due to the temporary census jobs, and you're just getting a lot of people just giving up on looking for work. It's getting really difficult for a lot of people out there. I'm sure you got friends, family members that might be out of a job looking, and unfortunately, my business as a loan officer, I'm running into people we're trying to do loans for, and then next thing we know, they're out of work now. So my heart goes out to those people. I've been in this situation myself. So let's kind of continue here. We got the average hourly working. People are working more hours. They're making a little bit more money, average hourly earnings, so they're making a little bit more. Here's the technicals. Another thing combined with the payrolls is the concerns about another Greece-like bailout for Hungary. Hungary is looking pretty desperate right now, having a lot of issues. And as a result, you're seeing the euro continue to drop versus the dollar. It's down to about $1.20 to a euro now. So these are a lot lows. About a month ago it was over $1.30, so it's a big drop. And because of all those news, the stock markets are plunging. Dow, as of right now, is over 200 in the hole. So right now we don't really seem to see a floor right now, and this looks like it could be lasting a while now. And now also I'm going to include a link here, but I found it really interesting, some comments, an article, some comments about rate hikes possibly coming up by Fed official Honig, Mr. Honig, out of Kansas City Fed Reserve. So stay tuned to that. That's some interesting news there that are being brought up. We know they're going to raise rates at one point, but this guy actually is laying out a plan when we should be raising rates and how much we should be raising rates, and it's very interesting. Take a look at once I post it. And then, so let's take a look at the bond market. Because of all the bad news in the equity markets, bonds are rejoicing. As you saw, we had this downward trend here, going down here, and this is where we left off the day. It went up a little bit, and then so boom, we jump up. We have jumped up 32 basis points to start the day, and currently it's up about 31 basis from the start of that. So we're up a total of 63 basis points from yesterday. That's huge, and I think we're maybe going to see another trend going upwards, going up. So I think we're going to be looking good. And I also include kind of a long term here. I mean, look at some of the long term here. Every time this 102 seems to be the mark in the bond market that's going to be very sustainable right now for at least a period of time. So it's going to be interesting to see, but I hope you guys all have a wonderful weekend, and definitely stay tuned for Monday to see what happens next in the markets. You guys have a great day.